market movers. This is The Pulse with Francine Lacqua.
Well, good morning and welcome to The Pulse. I'm Francine Lacqua here in London. Now, joining us to talk about the markets, Monica Defend, head of Amundi Investment Institute. Thank you, Monica, for getting us started on this Friday morning. There's been so much going on. Not only Fed price expectations, but actually the ECB has changed quite a lot of what it wants. What did you learn from the inflation numbers in the U.S.?
Well, we think that in any case, the disinflation trend is in place. If we look at the components, actually, those that were on the rise are those prone to volatility. So we hold with these 50 basis points cuts, 25 each time from now towards the end of the year.
So what does it look like in terms of treasuries? Where do you want to put your money in, Monica?
On the fixed income spectrum, it's really a matter of being tactical. So honestly, duration-wise on the US, we are plugged into a neutral position, but we do like steepeners, in particular on the 530 part of the curve. But we really manage it quite tactically.
Monica, when you look at some of the things that we heard, of course, from, for example, Mr. Goolsbee of the Fed, I mean, he, was praising some of the progress on inflation in the labor market. First of all, let's listen to what he had to say.
All of the measures broadly have been showing a labor market that is cooling from a white-hot level to something like sustainable full employment. I haven't seen anything that is yet convincing that there's a new trend that we're not stabilizing at full employment.
How much do you worry about employment, Monica?
Well, we think that this is a target of the Fed to cool the labor market, and it is actually stabilizing. We do not expect a crack, and as a whole, we do believe the U.S. economy will slow down. A recession is definitely not our base case. We are more on the soft landing scenario. But there is another important piece of information, the reporting season, so the real economy, the earnings. We will closely monitor how the corporate sector will report.
Monica, do you worry that inflation actually picks up in the next 8 to 9 months?
We've been discussing this while penciling the outlook for 2025, and it's a risk scenario, and probably the risk on top of our wall of worries. But as I was saying, the base scenario is the one of the Fed seeing inflation at target towards mid-2025. But indeed, it is a risk.
I mean, when you look at the fiscal policies, and I know you write about this very extensively, Monica, I mean, it's very different if you're sitting in France, Germany, the UK, or if you're sitting in China. What does that mean for investment opportunities?
For investment opportunities, it means that the outlook is quite heterogeneous, so there is plenty of opportunities on the fixed income market, for example, on the UK, on the euro curve. And on China, we keep our eyes open over the weekend to see what the Ministry of Finance will release. And this, depending on the size and the speed of the package, can be a game changer. For the time being, we maintain a neutral positive bias on the Chinese risk assets. But definitely, it's a time where we are quite active because the calendar is full of events.
It certainly is full of events, Monica. I feel like we're just always trying to catch up with the number of data or the number of news stories that we want to bring all of our viewers. Again, what's your take on euro? If you look at some of the opportunities in fixed income or also in the FX space, what do you have top of your list?
Well, we do believe that the euro will progressively appreciate. So we are starting to build on some longish euro position versus the US dollar. On the equity side, we do like the small cap asset class, for example, across the European corporate sector and some of the UK names. Overall, though, we maintain a light risk exposure. On the fixed income, we do like investment grade, definitely. The euro investment grade is something we like, and the euro duration. On peripherals, we maintain a constructive view for the time being.
Okay, Monica, keep it there because we also want to talk a little bit about Elon Musk. In a Hollywood-style production, Tesla CEO Elon Musk has unveiled a robotaxi without a steering wheel and pedals at an event in California.
We expect to be in production with the Cybercab, which is really highly optimized for autonomous transport in probably, well, I tend to be a little optimistic with timeframes, but in 2026.
Well, pre-market, actually, the stock is a little bit under pressure, down some 5%. The event did not address how Tesla will make the leap from selling advanced driver assistant features to fully autonomous vehicles. Let's bring in Craig Trudell, Bloomberg's global autos editor. Craig, I mean, this is my dream. I mean, I would love to be driven around in one of these, but why is the share price down so much?
Yeah, same for my wife, I should say. She wants to retire from driving. But I think what the market is pricing in here is we saw a huge run-up in the stock in the months leading up to this event. And what everyone was hoping to hear from Musk was a little bit more substance in terms of, whether we can really hang our hat on the idea that production will start. Some people wanted to see, for instance, the next generation Roadster that Tesla showed way back in 2017. That still isn't in production. So when he says, it'll be in production in a couple years, if you've been following him closely over the last half decade or so, you should know that to take that with a great big grain of salt.
So why does that? And he was funny. He said, I tend to be a little bit too optimistic. But is it the technology, or is it that he's distracted and so can't produce them?
I mean, I think there are real questions about both, right? I mean, he after all, has been out on the campaign trail as opposed to necessarily diving into the nitty-gritty details of the robotaxi, at least. That's been the sense, and you see him sort of ramping up his activity on X over the last months, even to a degree that is unusual even for him. And I do think that, technically speaking, we've seen so many automakers over the last, call it 10 years, have high hopes for being able to offer autonomy, but everyone except him has really sort of come to this realization that this is really, really challenging to make this road ready and safe for people to use.
Craig, thank you so much. Craig Trudell there, Bloomberg's global autos editor. Let's go back to Monica Defend from Amundi. Monica, I mean, when you look at some of the industries, and we are expecting quite a lot of earnings in the next couple of months, where does tech sit, for example, compared to cars, compared to financials?
Well, in terms of valuation, still, it's in particular, some names are incredibly expensive. So what we do expect, and also to reposition more boldly on the equity market, is for this valuation gap across the various names to broaden and to close. Therefore, on the tech, we are on the sector as a whole, we are neutral. So it is not where we do like to position the most, with the exception of some names. If I look into the sector positioning, really, I would say that we do prefer financial over consumer staples. But again, it's a market that doesn't allow you really to be strongly directional and to be risk on. We do prefer to have in place relative bets with hedges, so that we can move along this uncertainty that will stay for a while until, for example, the U.S. election. Then something might change.
Monica, when you look at, for example, some of the financials, I know you like financials. I mean, if you're a non-U.S. financial, if you're a European financial, can you really compete?
Well, actually, if I look at the sector allocation, this preference for financial is broadly spread. It's in Europe as well as in the US. But as I said, if you play it in a relative way within the region, it makes sense.
Monica, thank you, as always, for joining us. Monica Defender from the Amundi Investment Institute. Now, coming up, with polls suggesting a close race, very close race, we'll explore just what's at stake ahead of the upcoming U.S. election with Libby Cantrill, head of U.S. public policy at PIMCO. That's next, and this is Bloomberg. Welcome back, everyone. Now, we all know it. In less than 4 weeks, Americans will vote in one of the most consequential elections in U.S. history. Now, polls put Kamala Harris and Donald Trump neck and neck, and the chance of either the Democrats or Republicans sweeping the presidency and both houses of Congress is considered low. Now, let's discuss all of this with Libby Cantrill, head of U.S. public policy at PIMCO. Libby, I'm so happy you're in London. I mean, we're literally obsessed with what's going on, and the fact that the race is just so close.
It is so close, and honestly, since obviously Harris coming on the top of the ticket when she had a nice boost in polling, effectively since then it has been stagnant. The race has effectively not moved over the last 6 weeks, and this will come down to the marginal issue, to the marginal vote. And so any marginal event that happens over the next 25 days, 24 days, who's counting, will likely matter, at least at the margin. But I think you're right to talk about Congress, because from an investor's perspective, honestly, the composition of Congress matters just as much. So as what the White House, the run for the White House has sort of captured the imagination, both here and in the U.S. We are trying to focus our clients on the composition of Congress, so that will matter just as much.
But, Libby, why has Kamala Harris not been able to capitalize? I mean, she had a good debate, right? And we saw an uptick in polls, and then it hasn't really gone anywhere. So is it strategy? Is it policy? Like, what are people not sure about?
Yeah, Francine, the really interesting thing about Kamala Harris and her poll numbers, particularly her approval numbers, is that she really has gone, not to be glib here, but she's gone kind of from zero to hero. Her approval ratings have increased by about 12 points. That may not seem like a lot, but that does not happen in U.S. politics. Honestly, the last time that happened in modern U.S. history was post 9/11 with George W. Bush, when he saw that bump up in approval rating. So people really like her. I mean, this is the interesting thing. People really like her, and on temperament, on personality, on character, she does pull much higher than Donald Trump. But this is what we're telling our clients, if this election does come down to sort of personality and vibes, Harris has a good chance of winning. But if this is about policy and a path for economic policy, for sort of the trajectory of the United States, a lot of folks are saying that then they would want Donald Trump. They may not like him, but they like his policies.
So what policies? Let's actually hear it. So he was talking, I think, yesterday about tariffs. Let's listen to what he said on that.
I will impose whatever tariffs are required, 100%, 200%, 1,000%. They're not going to sell any cars into the United States with those plants.
I mean, it's difficult to know. I mean, probably not 1,000, but actually, does it make sense?
Yeah, so I do think investors should take this rhetoric relatively seriously. Again, maybe not 200%, not 1,000%. But what we know about President Trump is, one, he believes in tariffs. He's been talking about tariffs since the 1980s. He opposed tariffs on China. Of course, not to the extent that he said he was going to, but he did follow through with that. He can do much of this unilaterally. And I think something, Francine, that's really important between a potential Trump 2.0 and a Trump 1.0 is he was singularly focused effectively on China and on the trade deficit with China and getting a deal with China. Yeah. I think you fast forward to a Trump 2.0, the aperture is going to be much wider. It's going to be on things like Mexican cars or German cars or Japan or Ireland, other countries where the trade deficit has actually increased. And so the aperture will be much wider. So I do think we need to take him seriously on this. We're saying to guide into our clients, you may not see 1,000% tariffs, but you will see tariffs. The direction of travel here is very clear. Tariffs are going to be increasing not only on China, but on other countries as well.
What does that mean for inflation? What does that mean actually with the composition of the economy?
Yeah, so the market, is really focused on the potential inflationary impacts of tariffs, and that's for good reason. But also, the thing about tariffs is it cuts both ways. It can also be a headwind to U.S. growth in terms of demand destruction on the consumer side, but also impacting the export economy, export sectors in the U.S. as well. So, again, hard to tell and hard to feign precision here, because so much of this will depend on who he puts in his cabinet, what he actually follows through with. But again, the direction of travel here is clear. Inflation will likely be going up, and also growth could be hurt if he does what he says he's going to do.
I mean, will it only be loyalists in the cabinet? Because that also changes policy, right? If it's him doing every single decision.
Yeah, I mean, so I think what we saw under sort of Trump 1.0 is he was able to attract actually a widespread, very credentialed group of folks. I think that just, based on the mood music, I think a lot of those people actually may take a second look and maybe reconsider going into a Trump administration. Folks that he's talking about for these big, Treasury or Secretary NEC director, they're folks that the market is familiar with, and I actually think that would probably be well received by the market.
Okay, Libby, thanks so much. Libby Cantrill from PIMCO stays with us, and we'll talk a lot more about the Democratic side and what Kamala Harris can do in the next 24, 25 days. Who's counting? This is Bloomberg. Welcome back, everyone. Still with us, Libby Cantrill, head of U.S. Public Policy at PIMCO. Libby, we were talking. Thank you so much for sticking around. We were talking a little bit about why people have a good scorecard, I guess, for the economy under Trump. Is there anything? What does Kamala Harris do now to try and get votes from now until November 5th?
Yeah. So again, I mean, the electorate really is calcified, right? So it's, you're not going to move 48% of these sort of, always Trump voters, or at least, pretty clear Trump voters. So it's really just a question about, we were talking about a few 100,000 voters, maybe even fewer. And again, in these sort of 7 swing states, because of course we don't vote, the national vote, the popular vote doesn't really matter. And so there is a risk actually that with Kamala Harris, like we saw with Hillary Clinton, where she actually wins the popular vote but loses the electoral college. So you're going to see her in these 7 swing states. You're saying many people over here maybe are not familiar with them: Wisconsin, Michigan, North Carolina, Pennsylvania. Pennsylvania is the most important state. So honestly, how goes Pennsylvania, so goes the White House. So we're likely to see both candidates be spending a lot of time. But she's, I think she needs to win. She's already winning on personality, as we discussed. She needs to start trying to win on policy and reassure folks that some of those policies that she had staked out when she was running for president back in 2020, very, very progressive, pretty much out of sync with definitely the majority of the country, that those were not, that she sort of disavowed those and that she sort of moved on.
But Libby, the economy's doing great.
The economy is doing great, yes.
So why is that not translating?
Yeah, and this is the thing. I mean, I think also there's, inflation has been such a headwind for voters. There's this axiom in U.S. politics: the price of a gallon of gas, the price of a gallon of milk. These things have gone up a lot since Biden was inaugurated. And this is why, folks give Biden low marks, the president low marks, but they also sort of implicitly have given her low marks as well. They're also nostalgic for the 2019 economy, kind of pre-COVID, high real wages, high labor force participation, stable, not wars. And I think that's the other thing, is that this sort of foreign policy doesn't usually rank up very high with U.S. voters. We have the sort of luxury of being very inward focused, maybe to too much of an extent. But now it is, right, when you're actually diverting resources that could otherwise be going to Americans overseas. It actually is registering, and I do think that they are quite different on their foreign policy views.
Olivia, how does Congress go?
Yeah, Congress, again, so really important. Your taxes and spending all go through the legislature. And then really importantly, Francine, I'm not sure people sort of understand this nuance. Say if Trump were elected, anybody who he nominates to the Fed, for instance, or for Treasury Secretary, has to be confirmed by the U.S. Senate. So the composition of both the Senate and the House really matter. Honestly, a very tight race there. I mean, really what we're looking at is a very kind of, again, calcified, narrowly divided electorate, and that will be represented both at the White House but also in Congress. I think the Senate probably flips from very narrow Democratic control to very narrow Republican control. And we may actually see the House flip as well from very narrow Republican control to narrowly divided Democratic control. It'd actually be the first time in the history of the Republic where both chambers flip to the opposite, opposite parties. But I think that for investors, the big implication here, narrowly divided Congress, likely not going to actually see very much get done, kind of pointing more to gridlock than to big partisan legislation.
And we haven't even talked about deficits. You'll have to come back.
I would love to come back.
No one's talking about the deficit, actually.
Deficit, yes. 6.5% of GDP, who cares? Yeah, exactly. Apparently. Not to politicians in Washington yet.
Yeah, until an auction goes badly.
Exactly.
Libby, thank you so much.
Thanks so much.
Libby Cantrill from PIMCO. We'll hear, I hope, much more before the election from Libby. Coming up, as the French government unveils plans for tax hikes and spending cuts in next year's budget, we'll speak to Marie-Pierre de Bailliencourt, managing director of the Institut Montaigne. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Traders pair bets for a Fed cut and watch out for more stimulus out of China this weekend. Tesla shares slump pre-market after unveiling its long-awaited Cybercab. Production of the robotaxi is expected in 2026 and may cost less than $30,000. And France aims for big businesses and the wealthy in an effort to tackle its debt pile. Details of the budget plan ahead. Now, France has unveiled its budget for the next year, hitting big firms and the wealthy as it looks to trim its colossal debt pile. Well, the country aiming to deliver 60.6 billion euros worth of tax hikes and spending cuts. So for more on this, we're joined by Marie-Pierre de Bailliencourt, the managing director of Institut Montaigne. Thank you so much, Madame de Bailliencourt, for joining us. First of all, when you look at the budget, how will the Assembly, but also the people of France, take it?
Well, good morning. Thank you for having me. Well, the people of France are still waiting to understand how this budget is going to concretely unfold. The government and our Prime Minister, Mr. Barnier, in his general speech to the Parliament, announced 5 priorities, 1 method and 1 requirement. The requirement is, of course, as you said, the unpiling of the debt, which is extremely critical because it matches 3.2 trillion euros, and it's the deficit of our GDP is 6%, while it is 3.5% in the Eurozone. So it is critical. The method is about having a consensus, and the 5 priorities encompass the whole array of French concerns from the far right to the far left, standard of living and income, security, immigration, better public services, and last but not least, fraternity. So everyone got what they demanded.
Yeah, how do you think the proposal will actually be modified in the debate in the National Assembly? Again, Mr. Barnier has a very fragile government that could be toppled quite soon if it doesn't go ahead.
Yes, true. I have no crystal ball, so I don't know how each parliamentary member will vote in his unconscious. What I can say is that the margin for action is extremely narrow, and Mr. Barnier, in his budget, chose to address a part of the population we will not got down in the street. I mean, you have on the 60 billion requirement budget of savings, you have 40 billions from expenditure from the state and 20 billion ask of companies and high income. We don't know how people will react, but one thing for certain, those people, they don't go and protest in the street.
Yeah, and this is one of the questions that we're trying to understand, really, Marie-Pierre, is that there was a government report, I think, that came out and saying that Emmanuel Macron did many measures put in place to attract the wealthy, to attract the rich, to attract the bankers post-Brexit, and that could have cost them 4.5 billion euros in tax revenues, but at the same time, it increased GDP. So do you see a lot of wealthy leaving France on the backs of higher taxes?
Once again, I don't know, and there have been precedents. I think the government is trying to appeal to everybody, citizen concern. They try to appeal to companies, saying this is a specific effort in very dire times, and trying to put the burden on a little bit of everybody. My concern is that while doing so, they alienate a lot of people for a small gain. With the retirement, the pension reform, it was the same thing. At the end of the day, there was everybody in the street for a savings of 8 billion from now until 2027. So my concern is about, is it enough? Is it ambitious enough? It is clear enough? Or is it a lot of efforts for a small gain? To be more precise, for example, the reform of the state is slightly addressed, and I think this is one of the main issues. You have 2 main areas of savings that are required: structural reform on the state and structural reform on social benefits, and this is not much addressed. On the other hand, I understand his margin for maneuver are very slim. So he's trying to find a path in this very difficult environment.
Marie-Pierre de Bailliencourt, thank you so much for joining us today. Of course, we'll follow this very, very closely. She is Managing Director of Institut Montaigne. Now, here in the UK, this weekend marks the first 100 days of Keir Starmer's Labour government. And Caroline Hepker from Bloomberg Radio is here with the Prime Minister's report card so far. So, Caroline, thank you so much. You've been, doing quite a lot of reporting in the last couple of weeks to try and bring us what we'll hear in a second. So, what's the verdict in the first 100 days?
Yeah, I've been speaking to a smattering of top financiers of business leaders over the last 3 weeks. I think essentially the verdict on the first 100 days of the Labour government is a bit unimpressed and wondering where the extra details are. So, for example, I was speaking to Michael Moore, who's the top lobbyist for private equity and venture capital, BVCA, the industry group here in the UK. He's saying, yes, OK, they've ticked some boxes in the early days, but more detail is required. He talks about them having a small C conservative approach, which is quite weird given that it's a left-wing government. Mike Eakins, who's CIO at the Phoenix Group, saying that companies like him, who provide a huge swathe of retirement options for people in the UK, they want a pipeline of investable assets for businesses like theirs, and they are standing ready, in his words, to invest more, but they want more details. Anne Glover, who is the co-founder of Amadeus Capital Partners, she was saying that there has been no big win for the Labour government in these first few weeks in office. She says, admittedly, stability does take longer. It implies something more long-term. But she did have this warning ahead of the budget on the 30th of October.
Well, it goes to the tax questions. It's really, if there are going to be changes, phase them in. Don't do them all suddenly. There is a tendency for governments to kind of want to announce the change the next day so nobody can game it. I think that would be a mistake. Don't be ideological about it. Be practical and listen to the consultations that they have been engaging with.
So that was Anne Glover. Of course, she's been an investor in the UK for 30 years.
So there's also this big investment summit on Monday. Question marks about the timing because it's 2 weeks before, of course, the budget on October 30th. But what can we expect on Monday?
Well, this
The conversations that matter and the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, JP Morgan will be in the headlines today alongside Wells Fargo as they kick off the U.S. bank earnings season. Analysts, of course, will be keeping a close eye, very close eye, on trading revenues and IB fees. Well, let's get more with our finance team leader, Jenny Serene. Jenny, I'm quite excited about earnings season in the U.S. I know your team doesn't get any sleep because it's like coming thick and fast. But it sounds, of course, like IPO markets are still pretty muted. So what are we going to hear from the banks?
Yeah, I think that will be one of the big things is on the investment banking side. We saw a little bit of a pickup in merger activity so far this year, but probably still not enough to really write home about. And so, we're now 3/4 of the way through the year. How are people feeling about things like bonuses? If this picture really doesn't turn around anytime soon, do the banks start having to think about tougher decisions on their investment banks? And yeah, I think that will be one of the big question marks that analysts really have. You've got 3 months to turn this around. Does that really seem like a possibility?
Where are the bright spots?
So I think a lot of it, honestly, will be in more of the analyst or executive commentary and the analyst calls. So like net interest income has been one of the big bright spots for these banks. And I think it'll still hang in there, but that's expected to come down and come under pressure as the Fed cuts interest rates in the coming quarters. So I think a lot of it will be about how these banks are planning to kind of navigate this new environment that they're entering into. We'll probably hear a lot about cost cutting, and so expenses could end up being something that people really pay attention to. I think it'll be a bit of a mixed bag.
Jenny, we're so close to the U.S. election. Does it matter? Does the outcome matter to the banks?
I think absolutely. And so I think that'll probably be the number one question we hear from analysts on this call. We'll probably hear a lot about these banks stress testing their businesses for both outcomes. We might even hear a little bit about what they're doing for actual election day. That's a really big trading day. And so how are they getting ready? Are they making sure that their systems are up and in place? So I think that will be one of the big key features of the calls today.
Jenny, thank you so much, as always, for the terrific roundup. Jenny Serene there, our finance team leader here in London. Coming up, our interview with James Vowles, team principal of Williams Racing, and how it's betting on rule changes in Formula One to boost its performance. It was a good conversation. It's coming up next, and this is Bloomberg. Stellantis has announced the departure of its CFO as it seeks to regain investor trust and stabilize the business. Well, Natalie Knight only joined the carmaker last year but faced backlash over last month's profit warning. Let's bring in Bloomberg's Oliver Crook in Berlin. Ollie, hi. Knight's departure is part of a broad management shakeup at Stellantis. What do we know?
Yeah, Francine, listen, after that profit warning, as you mentioned about 2 weeks ago, something had to be done. And what was done after a 2-day board meeting in the United States by Carlos Tavares, the CEO of Stellantis, was a massive shakeup across the entire business globally. So we had the departure of the CFO. As you mentioned, we also have a shakeup at the COO's office, both also the local COOs, both in North America and in China, as well as the heads of Maserati and Alfa Romeo. And this comes as Carlos Tavares is dealing with a lot of things, including obviously the sort of broader sentiment within the auto industry, but a few idiosyncratic issues. They have a lot of inventory stuck in the United States. They've got issues with the unions. And of course, Francine, he's flying from the U.S. back to Rome to go to speak before lawmakers because they are very concerned about the fact that they might have to close factory and there's not that kind of capacity being generated within Europe. We also think about Carlos Tavares as this is basically his last year and a half as CEO. We know that John Elkann, the chairman, is looking for his replacement. The question will be for Tavares, will he be able over that period of time to both weather the storm and also bring exciting new cars to market? And that's exactly what we'll ask him when we speak to him on Monday from the Paris Auto Show. We should say, Francine, that this morning, after all of those moves, the shares are down 3%. That brings the shares down about 20% since that profit warning. So investors may be not taking solace in this management shakeup.
So we got delivery numbers also from Mercedes and BMW. What story does that tell us?
Yeah, so listen, not a very good story either. We had also profit warnings, not just from Stellantis, but from Mercedes, BMW, and also Volkswagen. And we got some of their delivery figures that tell us a very sort of negative story, particularly, Francine, in China. When you drill down into the China figures for these car makers, you had Mercedes down 13%, you had Porsche down 19%, BMW down 30%. If you think about that, Francine, that is 30% decrease in BMW's biggest market in China. And that is even before any conversation about retaliatory tariffs. There is one silver lining, Francine. I did look for one for BMW. They did manage to increase their EV sales by 10% in the quarter. That really bucks the trend for a lot of the automakers that are really struggling with those EV sales. And you show it there, you can contrast it to Mercedes, which was down 30% in the quarter. So overall, more bad news for the auto sector, Francine.
Ollie, thanks so much. Oliver Crook there in Berlin. Now, on Monday, we're live from the Paris Motor Show, where we'll also be speaking with the chief executive of Stellantis and a host of other leading figures from Europe's auto industry. Now, the Williams Formula One racing team is putting off plans that would benefit performance on the track. Instead, they have chosen to invest money in the 2026 season when new regulations are put into effect. Well, I spoke to the team principal of Williams Racing, James Vowles.
There's a real balance in our sport of trying to be successful now, because we have a race every 2 weeks, so you know whether you're doing good or bad, and you're accountable every few weeks for that. But we have to be investing in the future fundamentally, so that's both in 2025, which is a carryover of these regulations, but also into 2026, where I think it's the largest regulation change that I've known since I've been in the sport.
So what does that mean for your team?
What it means is there can't be a focus on now. There has to be a focus on the future, an absolute focus on the future. And that won't be the same up and down the grid. If you had other individuals here, they'd be more telling you next year is our championship year. For Williams, that's not the case. For Williams, we need this large regulation change in order to make sure that we're investing in that future at the cost of 2024 and 2025. And as long as your board are on board with that and your sponsors are on board with that, and they all are, and they understand that we want to make not small steps but jumps, we've got to do this the right way, which means that we've got to sacrifice the now for the future. And as a result of that, I'm confident it's the right move for us, and it's an opportunity.
But so concretely, how differently does the grid look like in 2026?
I mean, the good news is you'd have to watch the TV in 26 to find out. But I think you'll see big shifts. Over the last 3 years, we've pretty much, even this year and last year and next year, you're pretty much no teams are going to move dramatically. There was McLaren that's done a really good job moving forward. We've moved forward through the grid, but we're all getting closer, and that's the fact of these regulations. 26, you almost throw a dice to it. You start again. You end up with a shaking up the order. Great for the sport, great for the viewership, great for us, I hope.
So what does it take to get you up higher in the grid?
The main thing is this, that there's a finite amount of resource. All businesses have near enough finite amount of resource. We do as well. We're constrained by a cost cap, which is a brilliant item, by the way. But what that means is we simply can't just put more money into the bag to focus on the future. That's how we used to do it 5, 10 years ago. What we have to do is you've got to pull a resource, up to you how you divide it up. And what I've chosen to do is divide near enough all of it into 26. We're just going to get a car out there. We're going to do a great job in 24 and 25, but it won't be the jumps that we make. What it means, though, I'll give you an example. The team's around about 1,000 people. Aerodynamic teams are about 150 these days for everything. But you can then divide that up and say, I want 10% working on just 24 and 25. That's it. Right. 90% of those are looking at the future.
But again, how exactly does the money get spent? Like if you look at your 1, 2, 3 priorities.
So financially, what makes the car quick, first and foremost, is aerodynamics and the integration with vehicle dynamics. So we will make sure that we're investing in simulation technologies, investing in how we design the car, how we build the car and the aerodynamics around it. Because it's not just the bits that you see really on the surface of the car. What makes aerodynamics work is the whole package working together at the same time. So that's where you put your money. But there's not a lot you can do, surprisingly, in 24, apart from think about where you want to put your money in 26. Go through some concepts in your mind. There's a regulation that we've all agreed to where we can't actually put this car in what's called the wind tunnel. Effectively, it's where we develop the car primarily until January the 2nd, 2025. But what we can do is think about what we want to be testing all the way through the months of January, February, March, April, and get those all prepared now so that we're hitting the ground running.
We're seeing more money coming into the sport, I guess, as an investment. Are there unintended consequences of people seeing it as a financial investment instead of a sport?
I don't know if that's unintended consequences, but I'll give you my background into this. For many years, about 30 years, I've been in the sport, and I consider it a sport. It's an arena where you want to win. No, you want to dominate, not just win. That's what I want to be doing within this environment, and I've had the pleasure of doing so within a different team. But we were never profitable. We were never even a sustainable business. For 4 or 5 times in my career, I can remember moments where I thought I didn't have a job from one day to the next. That's not sustainable long term, and that's different to where we are today. Where we are today is we are a business and a sport. And what I mean by that is the cost cap keeps us sustainable. We can't spend more than that anymore, particularly. We can do within the arena of marketing and commercial, but on the car we can't. And that's all of a sudden changed the dynamic into something that's sustainable. And the finance is coming in and now creating an environment where teams can be sustainable for 5, 10 years, not worrying about what's happening next year.
Well, that was team principal of Williams Racing, James Vowles, and you can, of course, continue listening to the interview. We've also put the whole 15 minutes online. Now, Tesla shares have slumped pre-market, trading as Elon Musk unveiled prototypes of the automaker's long-awaited robotaxi Cybercab. Now, Musk says production may start in 2026 and that the vehicle could actually cost less than $30,000. Analysts note that the event did give a clearer picture of the company's autonomous plans, but it was light on details. A couple of things we're watching out for. Look, there's been a lot of data, of course, from Monday, I would say, until yesterday. European stocks, but also U.S. futures, little changed. Traders still digesting some of the hotter than anticipated inflation over in the U.S. They're also readying for the earnings season to take off. It was yesterday that we got this higher than expected inflation print for the month of September, but also rising unemployment benefits seem to underscore the challenge that the Federal Reserve is facing, which basically seems to be indicating some stalling progress in the fight to bring prices to target. Now, investors will also be watching U.S. September producer price numbers today for further indications about the Fed's easing path. When you look at, for example, what yields are doing, I think we have the 10-year yield up for you, 4.0767. Up next, a Bloomberg brief. Danny Berger's in New York, and this is Bloomberg.